What is up, guys, and welcome back. Today was a special day. It was the Bitcoin halving, the only third in the entire history of Bitcoin that has officially happened. Now, a lot of you have been asking me and writing me, hey Felix, what does the Bitcoin halving mean? What does it even stand for? And what kind of effect will it have on price? In today's video, we're going to dissect all of that. What it means, where it came from, and what kind of effect it is likely to have on price. So let's hop right in. The Bitcoin halving, in a way, is Bitcoin's predetermined monetary policy mechanism. All right, big words. Monetary policy is essentially the way we guide inflation and deflation. So the way we do this with the US dollar is with the Federal Reserve. Every month they get together and they decide, you know what, are we going to increase interest rates? Are we going to decrease interest rates? Are we going to, do programs like QE or giving out more credit in order to add liquidity? And through all of this, they generally shoot for an inflation target. And for the past few years, the Federal Reserve had an inflation target of around 2%. So their goal is to inflate the dollar by 2% a year. That's where they think it's healthy. That's where they think the economy grows the fastest. Now, with Bitcoin, it's very different. With Bitcoin, there are no 10 old white men that come to a meeting room and decide how are we going to inflate the dollar. No, with Bitcoin, it's different. With Bitcoin, there is no one central authority that decides how much Bitcoin will be inflated or how much it will be deflated. Instead, at the very beginning, from the very first day, in its algorithm, it was predetermined that number one, there will only ever be 21 million Bitcoin. That's it, no more. And furthermore, it was determined how are these going to be distributed. The founder Satoshi realized that the most important job for Bitcoin is for it to be secured. And the way we secure Bitcoin is through mining. And we might make a separate video on that. But just understand that mining basically ensures that all the financial transactions on the Bitcoin network are safe. Now, mining costs money, right? Because you have to run your computer, it takes electricity, hardware, and cooling costs. So in order to make it worth it for the miners to do their job and keep the network secure, we pay them in Bitcoin through what is essentially a subsidy. So in the beginning, a miner would get 50 Bitcoin if they successfully added a block to the blockchain. But in order to make sure that we can stay within this 21 million Bitcoin, the way it works is that every 4 years, the amount of Bitcoin that's given out, it's reduced in half. And that's where we get the word halving from. So the first 4 years, from 2009 till 2012, miners would receive 50 Bitcoin every 10 minutes. From 2012 till 2016, miners would get 25 Bitcoin every 10 minutes. And then from 2016 till May 2020, miners would get 12.5 Bitcoin every 10 minutes. Okay? And now for the first time in 4 years, since 2016, the halving has occurred, cutting it down from 12.5 Bitcoin to only 6.25 Bitcoin every 10 minutes. And this will keep halving every 4 years, or officially every 210,000 blocks, until one day in about 2140, there will be no more halvings left over. Why? Because at that point, the last halving will be down to 1 Satoshi. So you might ask yourself, how does it keep going afterwards? The idea is that afterwards, there's enough fees being collected by all the people making transactions that we don't need this subsidy anymore. Because remember, it started as a subsidy. You give industries a subsidy that you want to see grow. And then once they become big enough where they don't need that help, that subsidy anymore, they can walk on their own 2 feet. And that's the goal with the Bitcoin subsidy. So why was the Bitcoin halving so highly anticipated, so hotly debated and talked about, what effect it has on pricing? Now there's a couple of reasons. Number one, it's a stress test. This thing only happened 2 times before. So it's great to see that it happens, officially implements, and the show keeps going. There's no glitches in the algorithm. Number two, it shows that the security can be maintained because quite frankly, this is causing a stress on the miners, right? Whereas yesterday, a miner would still earn about $100,000 per block. From one 10-minute block to the next 10-minute block, all of a sudden that reward got cut from $100,000 a block down to $50,000 a block, right? We're talking about 12 Bitcoin at 8K down to 6 Bitcoin at 8K. So the revenue got cut in half. So clearly old machines, old miners got killed, got turned off because they were no longer profitable. And that in a way can cause a short decrease in network security. So it's always a test to see, Can we make it through this quick decrease in security, and will everything be fine? And the third and final reason why it's so important is because it is officially changing the inflation rate. Okay, so until yesterday, we had about a 3.6% inflation rate on Bitcoin. That's still pretty high, because when we say Bitcoin will replace the US dollar, but the dollar has a target inflation rate of 2%, technically Bitcoin has a higher inflation rate than the dollar. But since the halving, the inflation rate has officially dropped down to about 1.7 to 1.8%, making it lower than the inflation of the US dollar. And in fact, it's very close to the same inflation rate that gold has. Now, this isn't just relevant from, a big picture monetary policy perspective, but it's also from a very practical perspective, because miners are the ones that get the block reward. And miners are in a business where they have expenses. So quite naturally, miners tend to sell all the Bitcoin that they mine. And this quite naturally causes a lot of selling pressure on a daily basis. Every single day, miners used to get 1,800 Bitcoin. So you can imagine that roughly 1,800 Bitcoin go on to be sold every single day. Now that the reward gets halved, there's only 900 Bitcoin hitting the markets every single day as selling pressure. So not only is the sell side getting cut in half, but also we have demand rising higher and higher because of all the economic challenges that COVID has put on us. Because one thing that was quite common over the past 4 years is that big funds would buy Bitcoin over the counter, right? So when you buy over the counter, it doesn't affect the pricing on the exchanges. But what they could do then is move that Bitcoin from their wallets that they purchased over the counter, move it to the exchanges, and then market sell on exchanges, causing prices to be suppressed. So in a way, as more and more Bitcoin leave the over-the-counter space and move towards publicly traded exchanges, there will also be less and less manipulation being possible. Because in a way, the orders that happen over the counter are almost like dark, meaning we can't see them and they don't affect the official pricing. So technically, some institution could have been buying thousands of Bitcoin and it wouldn't have affected market price. Why? Because it happens OTC. Now granted, yes, institutions can still buy it OTC, but the big difference is that there simply isn't as much supply anymore because the supply flows are getting cut in half. An easy example is that 50% of all the mined Bitcoin were being bought up by Square and Grayscale. So now that the amount of Bitcoin has halved, those two companies alone have enough demand to buy up all of the supply. So now, since that might not be enough anymore, they will be forced to buy both over the counter and over exchanges in order to meet their demands. So in summary, when you look at the numbers, the halving is quite a fascinating event. Number one, it's fascinating because it just shows that Bitcoin works. There never was a CEO, there is no chairman, there is no board, it just works by itself. It's code and it works, and that's beautiful. That's part one. But the second part is that in the short term, there might be some challenges because of the difficulty dropping, because of minor capitulations, and that has sometimes in the past, like in 2016, led to a drop. Don't forget that part, because in 2016, from peak to bottom of the pre-halving rally, Bitcoin dropped about 40%. So yes, there can be some short-term downside. But when you look at the economics of the long run, Bitcoin has never been positioned better, has never been positioned in a more bullish light where it has a high chance of reaching the new all-time highs finally. So I'd love to hear your thoughts. Go leave a comment below whether or not you think Bitcoin will play a big role in this coming recession, whether or not you already hold some, whether you're looking into getting some. As always, do your own research. But also don't forget to like and subscribe, because I'll make sure that I'll bring you as much research, as much insights, and as many different perspectives as I can to help you guide you along your journey as you learn to understand technologies, the markets, and guide your own investments. And also don't forget to check out the link in the description with an offer for my academy. I've been running the academy for almost 4 years now, guiding people in everything from cryptocurrencies to global macro markets to simply help guide you along your investments. Make sure you don't fall for the scams. Make sure you understand how to read the charts, how to have proper risk management in place and succeed long term. If you have any questions, simply leave a comment, shoot me a message on Instagram. And with that, I'll see you next time. Have a good one.